last name I want to hit on is the most important one, which is Amazon. Amazon comes out with earnings this coming Thursday. There was an article in Reuters this past weekend talking about the YipitData, which is one of the like credit card data type companies, the high frequency data companies, saying that this company is going to beat the quarter because of better top line in North American retail. And just to be clear about this data, I recall Jeremy and I had a conversation with a client. This is a year and a half ago on Etsy when the stock was at 280. And the client said, well, you guys don't get this data out of Yipit. And they say trends are really strong right now. That was when the stock was at 280. Now Etsy is at $102. And it's probably worth about 60 to 80 bucks. So let's be just conscious of what the data is saying now. I think what we've got to look at is what the data is going to be telling people in 3 to 6 months. And that's where I think you've got a problem with Amazon. So we actually are modeling a beat. I say we, I mean Jeremy, he runs a great model on this company. We're modeling a beat on top line and on EBIT in the upcoming quarter to come out on Thursday. So there'll be a great headline, Amazon beats, rah, rah, rah. The fact of the matter is it's off of a sandbagged, like beaten down guide, and growth on an absolute basis is slowing. So there's no other way to cut it. Growth is slowing in North America. Growth is slowing at AWS. Growth is slowing internationally. So there's Amazon's all of their other services too, which are kind of a rounding error in the grand scheme of things relative to the ones I mentioned, but those aren't accelerating either. So the street is looking at 4.44 billion in EBIT in the upcoming quarter. And the likelihood is that the guide is going to be well below that. So this is going to be one of those push-pull events whereby you probably get a decent headline, but the guide, I think, is going to trump the headline because that headline is already in the stock. People have this real-time data. They're trading on it. They want an excuse to step up and buy Amazon, but the profits just aren't there. I mean, this is the company, as I've said on the call in the past, it's got the best data of any company in the world about the state and the pulse of the consumer and corporate profits, and it's laying off 27,000 people. Like, what the hell does that tell you? So we're back on Amazon into this.
Brian, it's about the YipitData. It's like, it's just think about like literally what I just went off on. It's the opposite of that. Okay, now that for the last decade, I've realized that my own views of my own brain aren't adequate in qualitative channel checking. I'm only going to depend on actual data because that's all that I can do is get an email from somebody that I pay for that says that because I can't model, I really kind of suck at this. So I really don't trust anybody other than inside information. I mean, it's like there's literally not one, just to layer on top of that, there's not one U.S. economic data point that would suggest you should buy U.S. consumption growth accelerating, in the last 6 weeks. I mean, there's not one. The retail sales number itself just went down 465 basis points from January to March. So you either know that or you don't, right? But if you don't know anything and you're just flailing around, go for the YipitData.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.